Welcome to the Quantum City Initiative, a show about the most important stories, ideas at the intersection of AI, cities, real estate, and the leaders shaping the future of how and where we live and work. Do you save and reinvigorate cities, or are you building new ones?
What is most critical for cities in the future with this sort of AI factory race to work? All right, F34, the QCI show. 34. Was that David Ortiz? Was he 34?
I think he was, yeah.
The David Ortiz show, QCI.
I literally just explained to my 5-year-old who David Ortiz was and how important it is to understand what a big game player is.
Big game player? Yeah. Or just knowing your role. Guy had one role, just hit dingers.
When the game's on the line, win the game.
Love that for him. Happy 4th. It's not the 4th. It's the 10th when we're filming this.
Happy 10th.
America's birthday. Did you have a good time?
Yeah, 250. Big one.
250. Big one. So we took the last 2 weeks off. Not really. We didn't take it off. We just ignored Justin when he sent us the invite to film, which is a good time. But the last time we recorded, we talked a little bit about the U.S. Paraguay game, which was our LA Customer Advisory Board. We had a lot of customers from North America join us. You gave some good feedback 2 weeks ago. And if you follow us on social, you would have seen that. We hosted our EMEA Customer Advisory Board. We had folks coming in from England. We had folks coming in from Paris, Amsterdam, Ireland, Riyadh, handful of others. And we had, with this one, we had about 20 folks at our Customer Advisory Board. They all flew to us. We did a nice week of entertaining, saw a couple of games at the Razor, aka Gillette, aka Boston Stadium, which was a good time. But forget about the soccer or the football in the World Cup. We saw 2 great games. But let's talk a little bit about the feedback. What did we talk about? What were our customers saying? What was the kind of theme and thesis? My guess is our readers or our listeners would know it was probably the intersection of quantum city, AI, tech, real estate. But Chase, tell us a little bit about the week.
I mean, it was a great week. You did an excellent job, and shout out to the team, our partners on the hospitality front. Those guys are the best. Matt's great. I think it was really interesting to see the contrast between kind of the US market and the European market. Obviously, I'd say there's the 2 bookends. There's some very substantial differences, and there's some very substantial similar trends and overlap. The difference is, number one, obviously our European customers, because country markets are so different, they tend to be a little less competitive in certain ways. And so it was probably a combination of that and just the World Cup, where I thought there was some really great kind of sharing and engagement across the group around what are the problems they're seeing in market and where are the opportunities. I think there was even some potential deal making happening, which was
we do take cuts of.
Yep, we sure do. That shows up in the bill later. But I think the European market, I don't know if it was the early adoption of flex. I think while hybrid is certainly a force there also seems to be a little less extremism around work, and there's pretty good flex infrastructure. I think the Netherlands in particular, and we do a lot of work with the collection there. Shout out to Nick and Sylvia, who are awesome. They're like a truly differentiated platform that's exemplary of hospitality in the workplace. So I think a lot of these groups are pretty well set up to capitalize on kind of the future of work moving forward. They're incredibly innovative in terms of how they're thinking about the impacts on, say, the traditional lease, and how you need to be working flexibility into a construct that can still be underwritten by institutional investors, family offices, things like that. Where the US market, I think, not overly surprising, is they're a little bit more opinionated, I think, on some of the things AI. I think that's just because we're the center of AI. It's all people talk about. And I'm not sure if the opinions are they don't necessarily mean that they're further ahead, right? I think there's a very large kind of group.
Americans are opinionated. Is that your point?
Yes. It's funny. Our French customers think the Americans are very opinionated, and the French have very strong opinions on that.
I think so. The only thing I'd say to that, I'll let you finish, is it's clear that sort of both our EMEA group and our sort of North America States American group, they're all utilizing the tools. North America, and maybe it was just a handful of people in the room, are certainly more opinionated. One observation that I saw was the North American folks, they were a little farther along on some of the automation and some of the agentic use. And the European folks were utilizing the tools still as those glorified search engines.
Yep. I think there's more trial and error in some of
Yeah.
the North American groups. I think there's a little bit more, I would say, planning that's been done about, hey, how is this different from traditional SaaS? And does it shift where within the technology stack, does it shift where the competitive advantage is? So I think because they're immersed in the markets that are the frontier, I think they're just close, like literally physically closer to it. So
like, for example, some of the larger companies, an OpenAI, an Anthropic, taking leases in their buildings.
Yes.
Like
Yes.
that. Okay.
Like in the West Coast, Texas, New York, right?
Yep.
You have presence, so you can't avoid it, right? Like they're in your buildings.
Yep.
So I think there's a little bit more of the, how do we digest this in a way, and what's it really mean for our business thinking? Whereas I think European market is a little bit more at the, okay, we need to start the journey. And it's not, when you look at where AI adoption truly is in commercial real estate, I don't think anybody would necessarily be quote unquote behind yet. But I think this is the year that, kind of heading into 2027, if you don't have a plan to start to attack this, then you're going to be behind.
Let's talk real quick, and not that our EMEA customers are going to see this because they're all on holiday for the next couple of weeks, but let's, just kidding, love you guys. Let's talk about the collection for a sec. They're a tiny, all things considered, tiny landlord in the Netherlands. I think they're one of the most forward-thinking folks with regards to experience, with regards to flex. I'd love, and I can't wait to see them adopt some of these automation and some of these agentic tools. Why are they as successful as they are? And again, it's a great team. It's a very small team. We've gotten to know them over the years. And if you're in Amsterdam, we certainly recommend looking them up. What is different and unique about what they're doing?
A couple of things. First and foremost, you can't undervalue a CEO with vision. And getting to know Nick Moore, he's a visionary, right? So he doesn't just understand the financials of commercial real estate and more broadly private equity, but he really has a really compelling vision on the future of, and it's really not just the physical component of buildings and things, but ultimately community, building a platform that really has a true customer relationship with the tenant. And his vision and where a lot of these things break down, I think they're, let's call it boutique-ness. I think where their kind of boutique positioning, being in Amsterdam, is an advantage, is, and in the really big platforms, it's kind of hard to get the executional engine up and running, is they have such extreme control. They know every inch of what's happening across their portfolio. And he has the perfect partner from an execution perspective, came out of Disney and all of this, to do some of the innovative things that the bigger platforms want to do, but it's hard to turn a tanker ship, right? So they're able to move quickly. They're able to monitor the results, right? Like in the philosophy of Peter Thiel, you don't want to go after the largest TAM initially. You want to dominate. You want to be the biggest fish in a small market first, prove out a model, and then find a way to expand TAM. So I think it's that connection between, he has a vision, but he understands execution. And on the operations side, Sylvia has vision and can execute, and the team is just super impressive. and in the details. When we go talk to other senior level executives about truly the operational components, oftentimes there's a gap with that.
Yeah, I think when we've talked about this a while, and I think a lot of people say that they have this background, but then you can really see it where it's just hospitality. They really, really get hospitality, and they've figured out how to make it work. And oh, by the way, and then some, they have absolute record rents in Amsterdam, highest in the market. They're 100% capacity, and they have membership fees on top of it. They do an incredible thing. We have done smaller case studies. We should do something larger on just their operating model. It's a fascinating one. And again, it's fascinating because it doesn't have this massive hyperscale approach. It's in the Netherlands. It's in Amsterdam. It's a handful of buildings. They are continuing to grow, but they love that element of just basically owning that city.
They're super rare in that they're the opposite of what we're going to be talking later in the show, where we've got first class problems, right? Like they have more demand than necessarily supply in a lot of ways, and they need more supply, but they have quality. They have the right quality controls. They're patient in not breaking from the model. They're definitely, I would say, we'll see in the next 5 to 10 years, the collection winning in other markets as well. I think the model works, and you saw the exact same progression in hospitality, where these boutique players ultimately become the model for large scale hospitality, house of brands, different hotel brands. Their model works. And I think when you talk about hospitality first, organizationally, hospitality in that business, it's not to check the box, but a lot of the bigger platforms, they hire a quote unquote hospitality person. And then you get into the reality of the org and authority, and the traditional people don't really listen to them. They don't have that much budget. They don't have decision-making authority. Whereas that's just collection is hospitality first. It's the operational execution of it.
Yeah, they're great. Check them out. All right, before we technically get started, because that was all banter and not even part of the show, we have the anchor story coming up. So there's this really interesting thing that just popped up as I was looking just randomly on the internet right before this. So I don't know if you saw this, but I'll clue you in. So
not if you just saw it.
There's a Brown professor. The headline: Brown professor suspects majority of his class used AI to cheat. Okay, fine. Blah, 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 blah. AI is bad. Whatever. Here's the story. The Brown professor did a take-home midterm. Okay. Now, this isn't anything new. Okay. Graduated Babson College a long time ago, class of 2007. What up? We had a couple of take-home midterms, but for the most part, they were all in person. Okay. He plotted the results of the scores.
Yeah.
And I believe it was the average, and I'm trying to scan quickly, the average score of the take-home was like a 90, basically, right? Everybody had just passed and did insane. That was the midterm. The average score of the in-person was like in the 60s. Okay. So he's saying AI allowed them to cheat. Dude, it's not AI. Listen, take home midterms, everybody sat around and did those together. So there's nothing new here. But the one thing that, and when we'll pull up the chart, that you love to see is it looks like there was maybe 2 people that actually scored the exact same at the take home and at the in-person. One of them, brilliant, got a 95 and then a 95.5. Okay. So this person has either got OpenAI or ChatGPT on his phone and cheated on both, or didn't cheat. Then this other individual, and just what a gem of a person, scored a 55 on the take home. Okay. So it's just incredible. And then a 59 on the in-person. So they did better in person. So they didn't cheat. Anyways, nothing new here, folks. People on take-home midterms. AI isn't ruining anything.
This is just the calculator. At some point,
TI-83.
They let us start using calculators on.
Remember they used to say we'd never have a calculator? We would never have a calculator in our pocket. But I'm looking at these 2 students here. One of them 95. The other one 55-59. Just
the fact that our elite higher ed institutions are spending time on this, I think, is part of the problem.
And I'll tell you what, this kid who got the 55-59, student S22, That kid's going places. Okay. Student
Yeah, the
S1.
question is, did the professor use AI to grade?
Ooh, darts. Yeah,
Yeah.
of course. This looks like an Anthropic generated dot chart, dot plot. So we'll see. All right. Anyways, thanks for humoring me. The anchor story, $3.5 billion tell. The power is really where all the dollars are going. It's the trophy asset. Power for the power, not necessarily the land, but you got to have land to get power. Okay, so last week, Digital Realty agreed to buy Blackstone's stake in 3 Northern Virginia data centers for $3.5 billion. We keep talking about this every week, every month. More and more capital goes into these data centers. Is this something we should be surprised about? What's your take on the future? Is this where all the dollars are going to go? We've talked about Cushman Wakefield study, commercials going up. This is a really clean check. Blackstone's making money. Digital Realty needs the power. They need the compute. We know all the models are coming out, Mythos and Fable 5, and ChatGPT launched a handful of models early this week. Are we going to see, is this all we're going to be reading about week over week, and all then talking about is power and how much money's going into power?
Yeah, this one in particular is interesting because understanding from what it looks like, it's 15-year lease terms, pretty good customer credits. I think it's like AA minus, 3.6% annual rent escalators, 100% lease to 3 distinct investment grade hyperscaler customers. This was a $7 billion JV from 2023. It feels like a short hold period if you're long the asset class. So I think that's like a little bit of an interesting signal. I don't think it's suggesting anything quite yet. I'm sure there's significantly more kind of detail to this specific deal and development. Blackstone has 160 billion in the pipeline for data centers, so it's not like a wholesale, hey, we're getting that asset class. But it's certainly different than when you look back at and what Blackstone is exceptional at, obviously making money, but like the equity office deal that they did around the great financial crisis, they bought a very large office portfolio where they identified that the value of the assets independently was greater than how equity was trading as a holistic REIT. And John Gray kind of did that deal and famously chopped up and sold the bottom, let's say, third of the assets before the whole market crashed. Is a wild deal. I think it was like 32 billion purchase price, of which they levered like 29 and quickly paid down like 13, 14 billion of the 29, essentially like the day they closed the deal, because they had negotiated that they could shop assets before it closed. So sold a bunch, paid down a bunch of the debt. Within 6 to 9 months, I think they sold the middle third of the portfolio, and then they held the top third through the great financial crisis on the assets they really liked and made a great return. So I don't know if there's something similar going on here. The terms on this seem pretty good. But also, particularly in this market, I think there's probably something compelling to not having a green banana, if you will. So 2.5 year hold period with a good return. I don't think anybody's going to be upset with that.
I think what's interesting about this is just the types of transaction we're seeing. It's not just cash. Blackstone, obviously, again, great at returning capital. It's stock. So Digital Realty paid mostly in stock for this. And so is this something we're going to see? We know Elon Musk is doing creative deals with his data centers, his compute, his power. We know Meta right now is also out there trying to pull an Elon Musk where he rents his compute for, I forget what that was, 3 billion or whatever it is a month, or I don't even remember, whatever that number is. We talked about it on the show. Is this a way for Blackstone and or other perhaps larger institutional investors to acquire discounts of these hyperscaling AI compute companies' stock?
That certainly changes the dynamic, right?
Because if you buy the deal for 3.5 in stock and the stock's trading at $1, and then the stock trades at $2, you now effectively have a $7 billion deal, right?
Yep. It actually signals more commitment, it would seem. So stock fell 5% because investors didn't like the dilution, but it's also a pretty good
Blackstone's got a
signal.
good taste.
It's a pretty good signal if you're Blackstone's never a bad signal.
No, I'm obsessed with follow the power right now.
Yeah.
Follow the power. That's where all the money's going. Sure, it's going to go to office. Sure, it's going to go. We'll talk about Starwood, although they're not putting any more money into office, apparently in their new fund. We'll get to that. It's just power. Follow the power, which is interesting because we don't really have nuclear capabilities. I feel like we're kind of going old school, but hey, maybe we'll run out. Maybe we won't. That's why we're here talking about it. Okay, Rex, let's talk about this. You've talked about this one. Okay, underwriting. Let's talk about underwriting for a second. Underwriters, they look at, I don't know, they look at the rent roll, look at the health of the business, maybe the health of the tenants a little bit. They look at the quality of the building, Class A, maybe some future cash flows, whatever it may be. You talked a little bit with Fast Company. Great article, by the way, good quotes. How is underwriting changing when we're thinking about the operating model of these businesses? And then with regards to return to office, does that actually matter now when these companies are going back to market to refi their debt?
I'm not sure how much the underwriters have fully digested the kind of structural changes here, where you're just looking at fundamentally more risk and retention of what used to be pretty stable leased asset with longer term commit. I think that's why you're still seeing all of the money focused on the top of the market, because as much as people are saying it's trophy, it's the product, the underwriters are purely looking at the term of commit.
Is that because they're lazy? Is that just lazy? We're just being lazy. Everybody's at the top, so play at the top.
I think it's conservative.
That sounds lazy. Okay, fine.
I think it's like, I don't see it coming from.
Yeah, but risk reward here. But okay, keep going. Sorry.
I don't see it coming from public credit, right? I think you're going to need private credit to come in and take on some more risk, because that's what they're built for. And then I think once it gets kind of proven out, then I think you'll look, we know how to underwrite hospitality. And it really is the long-term commit of the stable hospitality groups where they're dealing with that short-term stay, right? If you have a platform that can command more margin, because you get more margin if you trade on term, you should get higher rental rates if you're providing that within your terms. So I think it's going to take a couple cycles to prove that you can do this going bust.
How long are cycles? What do you mean by take a couple cycles?
And it's probably 5 years, right? You're looking at 3 to 7. So I'd peg it at 5. So you're going to need a few of those. And I think there's still some wishful thinking, right? Because you're seeing the AI boom and you're seeing the competitive nature of one segment of the economy. I think there's a little bit of wishful thinking that because professional services, particularly in New York, and the AI companies are bringing people back to work, that we're going to have a Monday through Friday culture again. I don't think that's going to be broadly the case. I don't think the healing for anything below trophy is going to look the same as trophy, right? I think it's going to need to look more like that hospitality model.
Yeah, and I'm fine with that. And again, Starwood raised a distressed fund, $10.2 billion. None of it's going to office. There are a lot of people, LBA and a handful of other folks, that have said they're actually investing into office now. So, okay, if underwriters and folks are, the rich keep getting richer, we talked about the K curve, we've talked about all that sort of stuff, but without a fundamental shift and the appetite for risk, what is going to happen to the, I don't know, dead space, the Class B and C space out there, if it can't get underwritten? If there's no appetite for risk, to me, buy low, sell high. Sure, you got to retrofit. What's going to happen to it?
This is where you're going to need, and look, it ties back to our collection conversations, right? There needs to be experiential product that is not purely brand new build of shiny glass buildings that are all that pro serve feel to it. Like you're gonna need to make the nostalgia of some of those older eras of commercial real estate work for an experiential product that not everybody can afford these ultra premium rents. So it's like, how do you more cost efficiently make it cool, essentially, to different types of companies than the Fortune whatever and the AI hyperscalers and all that, right?
Yeah, I just fundamentally believe underwriting needs to change, and it's got to be faster than maybe not. Commercial real estate moves slow. I guess 5 years is we'll blink and it'll be 5 years from now. So we'll see. Okay, let's talk. So let's talk about Miami. Quantum review. All right, we've talked about Miami before. We did the scorecard. I forgot what they got, but they scored very high. Good news is Miami's been all over the news because of the World Cup, which is great. Shout out Will Smith. We're going to, what's that song? We're going to Miami. Miami is the city where the heat is on. Love that song.
It's our first Will Smith shout out.
Listen, when you're hot, okay? Miami is just, it's the hottest office market in America right now. But I want to talk about a couple concerns that I have before I effectively move down there and our company down there, which you heard it here first, folks. It's got the lowest vacancy. It's got record rents. It's got positive absorption. Half the nation's office loans can't refinance, except for in little old Miami. Good thing World Cup is there. It's all over the news, right? We got a huge game coming up, Norway versus England, I believe tomorrow. The Spain game is today. So that'll be Saturday, because you folks are going to get this later because you'll see the taped version, not the live version, which is not in front of our live studio audience. But let's talk about the data here. Vacancy, 12.5% at the end of Q1 2026, lowest in the U.S., 18% national, 18% vacancy national. Miami's not even close to that. Not even close. No. Record rents. No. Overall gross, almost $63 a foot. Class A, over $70 a foot. Positive net absorption. They're just on fire. Okay, here's what concerns me about Miami, and a funny story about Florida in general. My old man, like your folks, they spent some time in Florida. My old man bought a place in Sarasota, and it was in the fall of 23, maybe 24, right before he closed on it, and his insurance hadn't cleared. So his condo, whatever it was in Sarasota, technically was insured. And then that massive hurricane hit Florida. Luckily, he's on the second floor. His spot wasn't completely destroyed. But if we're all flocking to Florida and Miami and we're getting stronger hurricanes for whatever reason, insurance is absolutely through the roof. Is the Miami market sustainable?
I think that's their one knock, which is the one uncontrollable, right? Is the weather and climate risk, because insurance is tough.
Insurance is brutal.
Every year you face the storm disruptions. My parents are West Coast on Sanibel Island, and that whole island got wiped out a couple of years back, so that was tough. But they get most other things right in terms of when we think about the individual liberty, right? It's super low tax, it's low regulatory friction. The mayor of Miami a while back very famously personally was trying to help businesses move there and tweeting at him. And
Suarez, we have actually reached out to him to come on the show. To no surprise to anybody, he has not responded yet.
We'll get him. The legal posture, I would say, is net attractor, and you can see it in the migration numbers. Obviously, it's an experiential city. It's great culture. Cuban culture down there is awesome. The weather is great when you're not getting hammered by storms. They're doing well in finance in particular. They've got a bit of a tech movement. The Brickell area is really, Wall Street South. It's a financial hub. I think some of the issues are system efficiency. It's very car dependent. Traffic's tough. There's that limited transit infrastructure, congestion, in and around airport is apparently pretty tough. But when you have like a booming economy, I'm not sure who really does nail the airport piece of it. Like, to some degree, that's a bit of a first class problem. And then it's like Bayfront Park, Brickell, Wynwood. They have these disparate, strong hubs. When you're in them, they're very walkable, but tough to get to from one another. And then the tech piece had some momentum. It feels like it's died down a little bit. I think Austin, I don't know if it's a proximity to the Valley or Elon and crew going there. The tech momentum doesn't seem to quite be as much as the finance momentum, but Port Miami has a pretty smart tech stack. It's certainly not like Singapore or some of the Chinese ports, but for an American one, it's pretty good, which it's unfortunate that we're not a leader in this, but we saw all the longshoremen and kind of unions struggle to do some of the more advanced automation things. So overall, I mean, it's one of the strongest, right? You're probably looking at New York purely because of the inherent DNA of talent and global hub. Austin and Miami are like the three, and New York's got a litany of problems that very uniquely tends to power through because of its kind of network effects. But those are the three most interesting to watch that are like top 25, right?
People are maybe coming back to the Valley. California's got a world of issues as well, similar to New York on the sort of political front. The only thing really boosting California is all that there's still a lot of residents from SpaceX in California, despite them moving to Texas. All that OpenAI secondaries, all those Anthropic secondaries, all that money still flowing into Silicon Valley. When you got a bunch of money,
it's a powerful network effect, right? Like human capital density is the thing that bad policy for business tends to be a leech on, something that frankly governments didn't earn. The very talented people that went west way back in the 1800s, now they're doing their best to drive that economic engine out of the state, which is somewhat like killing the golden goose. But it's hard to uproot, right? Like, you've seen a lot of companies that go to Austin, but they still have a lot of their talent there. Like, it's hard for people to uproot themselves. The Valley and New York have very powerful network effects.
I do what folks, some of the New York firms and the banks are heading to Austin. We know that, right? We've talked about that, but they're calling it, have you heard this? Y'all Street?
Like that.
Y'all Street. No more Wall Street, everybody. Y'all Street. Yeah. Certainly, I didn't make that up. I heard
Branding matters. Branding matters.
Brand matters. Love Y'all Street. Okay, let's get to some quick hits. The June. So, listen, we've been in. So HQO has been around for years or so, a little less, depending on when our actual founding date was. We've gone through COVID ups and downs, which was okay, and then we went through high interest rates. And I think if you look back, and hopefully when we go public, like an Anthropic and SpaceX will, for the same amount of money at HQO, we'll take a look back and we'll say, man, that high interest rate environment was challenging. Okay, why was it challenging? Because we talked about debt, we talked about refis. Most of our customers they're strung along by the rates in which they have access to capital. We thought that we were going to be out of the woods a little bit with our high interest rate environment. However, the June jobs miss was not great. The 10-year treasury is still above 4. It's 4.5%. June payrolls was brutal. Usually when we see a jobs miss, that means cheaper money's coming. But the 10-year treasury won't move. What does this mean for? Oh, and now there's a 50% chance of a rate hike. Now, we were talking about rate cuts, right? Warsh was coming in, rate cuts. Maybe President Trump was going to force him to do rate cuts to make money cheaper. He obviously said he's going to operate independent. Are we looking at rate hikes here? And what, if any, impact will this have for commercial real estate? What's your opinion?
Everything just seems stuck, right? Frankly, you've got these two things in tension, right? Obviously you want good jobs numbers, but when you have sticky inflation, the other signal that the Fed's mandate to work off of is the jobs numbers. So it's like temporarily helpful if they're trying not to raise interest rates, right? It is important. The Fed's become too politicized. It's important for it to be independent. And a lot of the things, when you look past ultimately who nominates and all of those things, and you purely look at Warsh's record and I think some of the things that he wants to do, I think he's swimming in the right direction of modernizing data collection and evolving the Fed to be a little bit more modern, which I think is super important. But we're kind of stuck. And then a lot of this was like the first few days coming out of July, and you have the Iran stuff ramping back up in the last day or two. I think that's the biggest risk factor from an inflation perspective. And I think we do a lot of mental gymnastics around inflation. You've got different ways to measure it. You're taking volatile food out here, you're taking housing out there, and all these things. And at the end of the day, like, nothing really matters except for if the American consumer is getting hammered on cost. Like, it's helpful to understand where you need to try to optimize. Is it housing? Is it food? Is it energy? That's all important. But at the end of the day, it just needs to be lower. So you can do the political gamesmanship on which metric you think is important at the time, which everybody does. Both sides do it. But costs are still just too high. And the energy sits beneath everything, right? It's a real quagmire that we seem to be stuck in, with this Strait of Hormuz being as much of a choke point as it is.
I think we're just not going to see cap rates like we did pre-COVID and pre.
Which is fine.
Rate hikes. That's fine. I think but my point of saying that was, we need to understand that whether we do see rate cuts or rate hikes, this is our new operating standard. And
yeah, the
companies need
area
to be more efficient.
wasn't really good either, right?
Yeah.
Like, when you look at the kind of
I had a great
fiscal
time in Zurich, by the way. I had a great time.
if you sold in 21, everybody had a great time, but it's not sustainable. When you look at the fiscal and monetary policy, like, one of the things that I really can't understand is, back in the 80s and 90s, there used to be a lot more emphasis on M2, the money supply. And when you look at easing and those things, it's a little bit more derivative of what the news covers. I know it's more financially sophisticated, but when you purely print your way out of problems, like, we know what happens when you do that. Like, you're just creating a downstream problem that's future Chase and Greg's problem.
By the way, those are my favorite.
Like, it was always going to take time to unwind, and that was the unfortunate thing about Doge. Like, I do think that the intention there was taking medicine, and I'm not sure where we have system alignment for taking the medicine that's ultimately going to be needed to get our financial house in order in certain ways. If you're a Ray Dalio follower, who really bums me out,
real bummer to
he's
follow.
a really smart guy.
Real bummer.
This has happened throughout human history over the last 500 years.
Yeah, basically his point is that America's reign is up, basically.
Yep. He says, if we don't take certain action.
Is that action being taken? Okay, we'll find out.
Seen it. Although I follow some pretty wild kind of X accounts, like these, like, anonymous, on the fringe financial accounts.
And everything you read on X is true. So what do you got?
Yeah. But what was funny is there was this I sent it to you, is this really wild thread about how the administration, and I don't think it was the Fed, it was the Treasury, was
was this the Bitcoin gold thing where they were marking it to market? Yeah.
Yes. But so, for the audience, there was this conspiracy that the Treasury and the administration were essentially going to reprice gold and make it, wildly more valuable. And to make a long thread short, essentially take this jujitsu move to do some financial engineering to leverage gold and crypto to negate some of our debt. We'll simplify it to that.
Yeah, on paper. Right.
Yeah. And I sent it to you, Greg, and I was like, this seems bonkers. However, I was watching CNBC and they asked Besson about it. He had to answer. He was like, no, I'm not planning on radically repricing gold. They were talking about essentially 10xing the value of gold to financially engineer their way out of.
Well, I believe it was that we had marked to market a very old price for both gold and crypto. And so it wasn't necessarily massively inflating the price of gold per ounce. It was, we were just catching up.
We weren't saying that, but
we were catching up to it, and therefore it would automatically delete some debt.
yes.
Which seems reasonable. The other thing is the debt counter
market and then immediately refi and
right.
Someone always gets left holding the bag.
Right. And I feel like there's all these websites out there to track our debt, right? And it's just a ticker up. I feel like we just delete those websites and then then the debt goes away, right? If we're printing money, we'll just print more money to go to the debt, right? We'll just pay our credit, whatever. Anyways, I do like X conspiracy theories. Okay, we got a couple more quick hits to hit, then we'll get to pop culture. We get some good pop culture stuff. Obviously, office to residential conversions hit an all-time record. Did not think we were going to see this. Still don't fundamentally believe the conversion is a good purchase. However, right now, there's almost 100,000 apartments under conversion, which is up 30% year over year. They're all coming from office, or not all of them. 50% of all the planned adaptive reuse are coming from office. Majority of them are in New York. New York was in the news this week. What happens when you rush an office to resi conversion, and maybe you cut corners because your cap rates and your debt is expensive? There's a building in Manhattan it's falling down because it allegedly was rushed on the conversion. So maybe conversions aren't the way to go. This was the question I asked you earlier. What happens to all that B and C stock? Okay, maybe it goes to resi, but then can you actually make the money on resi? Do the fundamentals and financials work out if you act to truly invest? And then what happens if you cut corners while the buildings fall down?
Probably 2 years ago, I'd spoken to one of the most sophisticated and storied landlords focused on Lower Manhattan. And they announced, pretty big to take on these conversions. They went and assessed something.
You're talking about the guys that had a pretty big impact on World Trade after 9/11? We're thinking of the same people? Yeah.
Yep. Great people, very smart. And they assessed something like a couple hundred buildings. Mm-hmm. And ultimately it came down to 11 they thought could be converted. So I think there's a lot of operational complexity, and they're sophisticated, right? Like they know what they're doing. Because of the incentives, you're probably getting some less sophisticated people chasing opportunity. This is obviously a extreme outlier, but the problem is you look at conversion, where when you have headwinds in the capital markets, conversion feels more palatable than, all right, let's knock it down and rebuild, because your basis in theory is lower on conversion, right? And I just think the reality is it's super hard. It's a really challenging thing to get right.
But something's got to happen to all those buildings, right? Although it is amazing to me when you go downtown Boston, you go in any major metro city, there are some buildings that are just been boarded up for a very long time. There's one on High Street in Boston we used to walk by all the time, and I'm just like, somebody's just holding the bag there? What's going on with that capital? They just don't want to do it. It's cheaper to do nothing?
Yeah, you're sitting on land value, property taxes. It's probably been owned for a very long time. And is it going to appreciate in a way that you're willing to
just to hold,
eat the taxes?
Good segue. Land value. Great segue. The demolition boom. What happens when the land is worth more than the building and effectively land combined, but more so the building. This is a trend that, okay, so you're sitting on a bunch of buildings. The land is the most powerful asset. What do? Instead of retroing it, we just talked about those issues. Demolish it.
It's taking the medicine, man. It clears the delusion, right? This just needs to happen in certain places, right? You got to demolish, convert, recap. Like,
but with the demolish, what we're saying is that the price per square foot it's negative. There is zero value to those square feet, either in resi or in office in some of the best cities in the planet. Zero value.
I think there's a bit of a lack of creativity. The Quinn, great example in Boston of it was the Algonquin Club and up and down Com Ave for non-Boston people. The Boston Brahmin had the Harvard Club and the Algonquin Club and all that stuff. My fellow show host here is a member of the Quinn. And
thank you. Thanks to Dan Coe.
High Society. Shout out Dan Coe.
And the Edgerleys, who are also an investor in HQO, but neither here nor there.
But they took what is a very old building that has a ton of charm, and they have, when you go in, you wouldn't think, man, this is a really old building. Like it has the exterior feels like old Boston, which is one of the selling points, not a negative, right? If that thing lived in a modern build, it would be weird. So they were thoughtful about how they redid that place, and it is the ultimate mixed use asset, right? It's got a fitness center, it has hotel rooms, people hold meetings there, it hosts events. Perfect example of creativity on what do we do with some antiquated stock.
I keep coming back to, well, now I can't remember the name of the fund. Shoot. I keep coming back to Daniel English and his legacy investing and the way that they're thinking about data centers and power. And I think we're going to see a lot more of this rather than the sprawl and looking at large acreage for data centers. Legacy and what they're trying to do is put them into cities and just in specific floors of buildings. And I can't help but think about that with regards to creativity. You're going to see more data centers. It's not new, by the way. Macy's in Downtown Crossing has got one of the largest data centers on the Eastern Seaboard, right in the middle of Boston. Not many people know about it. It's not. I don't know who buys the compute now, but I don't think it's for Anthropic or OpenAI or any of those. But have to imagine that's coming.
Yeah.
Last quick hit number 6, 7, 5. I don't know how many we've done. Before we get to one more bit of news, we talked a little bit about this. Starwood closed a $10.2 billion opportunistic fund. I love the name opportunistic. That speaks buy low, sell high. We kind of teased this out. The bummer about this is there's no mention of office. None whatsoever. Residential, data center, industrial, hospitality across the U.S. and Europe. 20 deals, $3 billion in equity already deployed. No office.
Yeah.
Signal or whatever.
It was like a year or two ago.
10 billion is not a ton of money. So
very Stern-liked. Had some pretty, obviously very smart guy. Has done pretty well. It's a big complex platform. He was talking about how certain markets, I forget if it's Berlin or one of the German markets, has 98% office occupancy. So they play a very global game. But when you look at the themes they're focused on, like, I don't think these are surprising in terms of residential, data center, industrial, hospitality. Like, those are safe bets to raise against. Sure. And when it's an AUM game, there's going to need to be smaller bets made on office when it's a contrarian play to bring back larger headline folks because they're an AUM and fees generating game, right? So I think we'll see what the crafty smaller folks think and do. And then I'd say in the 2030s, if it gets proved out, you'll see office looking more like retail.
I like that. Experiential. One more bit of news. Got a couple bits of news this week. Couple stuff that's on the docket. Couple stuff that's not. Can't even believe Justin missed this one. Big miss, Justin, by the way. When you're editing this, big fail, man. Can't even
Oh,
believe you missed it.
I didn't read. I never read one more bit. Now I'm reading it. I can't believe we're coming back to Tilly.
No, let's not we'll get to Tilly. That's actually a legit one he found. We'll get to Tilly in a second. No, the one that's not even on the docket, T Swift. T Swift and Kelsey
she got
getting married. The most anticipated wedding since the royal wedding. Big royal wedding fan myself back in the day. And Travis Kelce and T Swift, Justin, you missed that? What a showstopper this was. Just upset. Certainly was never going to get the invite, but was upset that they were very successful in their NDAs. I've only seen a couple of leaked photos here and there. It looked gorgeous. It was at MSG over the weekend. A lot of celebs, 1,000+ people, a lot of great athletes. Looked like a great time.
I think it's a real weird move to do your wedding at the most famous arena in the world and then be like, nobody can talk about it.
Who's going to be talking about it?
Everybody.
No, but you know what she just did? You know what this is? This is her next 3 albums. She is brilliant. She's going to, this is her story, right? She's, ever since she was a teenager writing about the breakups, and Jake Jill, big fan, by the way, of Jake Gyllenhaal. And that song she wrote about him is one of my favorite T Swift songs. I forget the name of it, but I'll listen to it on my way to the office shortly. And is this not perfect for her narrative? This is perfect.
Very good at business.
It's business. Now she gets to write about the wedding at MSG where she performs. Oh my God, unbelievable.
Yeah, she knows what she's doing.
Unbelievable. Good for Kelsey. My goodness.
You're right.
And the Kelsey boys. Jason, too.
Jason.
Shout out when we saw you.
Yeah, actually, it really is. We joke about people not coming on. We're buddies with Jason from our first HQOX event.
What a great guy. Next bit of news, a bunch of World Cup stuff. There was something that was rather interesting. I don't know if it was true or not. We know what did happen is the U.S. was charged red cup, right? Or red card, whatever it's called. Not awarded red card. And that red card was reversed. Yeah. And of course, President Trump took to Twitter.
The Wall Street Journal had a big article. Yeah. The administration called FIFA. Who cares? Everybody's acting like this is new. Who cares? Egypt is now beating up FIFA because they're complaining about the refs. The reason that they have a constitution and rules is because every country tries to do this.
Oh, FIFA was that with all the Argentinian refs or something like that?
Well, it's just like, look, every country lobbies FIFA. Who cares?
Yeah.
On both sides, everybody's, he's a hero. No, that's like what he should do.
Be like, I love FIFA. It's got to be one of the most corrupt.
And then the people who are like, he shouldn't know. Who cares?
Yeah. I don't know. I think it's I will say, watching a lot of these World Cup games, which has been wonderful, by the way. Never been a huge football fan, soccer. I am now.
Really great. Minus the U.S. being the U.S. and doing
that. But whatever. We kind of knew that was going to happen. The most fascinating thing is when, I don't even know this guy's name. He kind of looks like Mr. Peanut or maybe the guy from Six Flags. Who's the head of FIFA? That guy?
Yeah, whatever.
Whatever his name is. That guy is at every game. And they're all not in the same stadium. This guy's got to be a jet setter. I got to look at this because literally I'm watching a game at 3 o'clock.
This should have been an AI story, not a soccer.
Yeah, it probably is. I'm watching the game at 3 o'clock. And it's in Miami, I think. And then at 9 o'clock, this guy's already in Seattle or Vancouver or Mexico City, wherever it is.
They got a few of them.
They might have a few of them. I didn't even think about that. I was just like, man, this guy must have a pretty sweet jet. It's not real. He actually doesn't look real. Okay, last bit of news. Let's talk about Tilly for a second. Okay, we talked about Tilly Norwood, who came on the scene, I don't know, 20 episodes ago, whatever that is. Got to be 6-7 months ago. Came on the scene 6-7 months ago. She is not real. She is an AI-generated actress. We made fun of this, and yet she's set to make her big screen debut, starring in a film called Misaligned. I'm going to offer my opinion.
By the way, hilarious that the name of the movie is Misaligned. It's
good.
AI actor taking an actor's job.
It's good, but let me think about this for a second. Let me opine before you get to take this one. Okay. So I keep thinking about Tilly. Tilly looks like a real person. She looks like a real person, right? Justin will show up the photo.
Sure.
She's an AI actress.
Talked about her before.
What's interesting is I think about cartoons. I think about cartoons for a second. Are cartoon drawings not AI? Are they not AI actors and actresses? So I'm kind of like, what's new here? This is just a more realistic version of a cartoon, but she's a cartoon. She's fake. She's a drawing. Effectively, she's a drawing.
Yeah, I guess the argument is there's a voice actor for the Pixar stuff, but yeah, you're not wrong.
I'm not wrong.
You're
Not wrong at all.
And voice actors probably get overpaid anyway, would be my
Which
guess.
is a bummer because that's actually, now that I got this microphone, which is not even on actually, it's just the microphone from Mike. No, I'm just kidding. It actually does work. But I was trying to get into the voice acting game because I feel like it's got to be an easy paycheck.
Mm.
Is it not? I don't know.
It's got to be the best gig.
You sit there and talk.
It's got to be the
I can
best
do
gig. It's like people who do this for a living. But on Tilly, like we talked about this before, you don't really hear the actors pounding the table for all the below the line, behind the scenes, blue collar work that has been completely hollowed out of Los Angeles over the last, 5, 10, 15 years. They don't particularly care about the average blue collar American worker. I don't see a ton of them out there using their platforms to talk about the job problems that average blue collar worker has been struggling with. But boy, they are sure mad about one AI actress.
Yeah, Tilly. I hope the movie's successful. I'll check it out. It's just a cartoon, so everybody just got to understand. It's a better drawn cartoon. It's a more realistic cartoon. I don't know, whatever. It is what it is. I guess there's no voice behind it, but that's fine. We've always had. Do you remember way back in the day there was that thing we used to type on desktop computers? You could say stuff into it, and it was like that computer voice. We got better computer voices. It's like we have better drawings. It's a cartoon. It's fine. It's fine. One more callback to T Swift. Jason Kelsey said he had well over 15 beers at the wedding. So
proud of him.
What a guy. What a guy. All right, that's a wrap. Oh, we're well over an hour. Wow.
Yeah,
talking a little bit too much about
you talking about T Swift and
we got carried away. Lost track of time. Got carried away. Listen, thanks for coming out. We're gonna continue. We got a bunch of exciting things coming up. We got our save the dates for Strata coming out. We got a couple of guests coming on. We got a handful of our folks are traveling. We're gonna be doing some drop-ins and some shows with some of our MDs and sales folks as they head out to events. In a couple of weeks, we'll be in Dallas. We'll have some footage from that, which will be great. And as always, keep the feedback coming. Looking forward to seeing how people react to my haircut because that was big news this week. So appreciate y'all. Wall Street, thanks for coming out.
Great job.